I'm Danielle Hale, Chief Economist for Realtor.com, and here's what you need to know. Are we or aren't we in a recession? Last week I noted that mild GDP declines had raised this question. This week, the jobs report answered in a very different way. Data show that U.S. companies added more than 500,000 jobs to payrolls in July, well above recent averages, bringing the number of jobs in the U.S. above its pre-pandemic total. This helped drive the unemployment rate down to 3.5%, the 50-year low reached just before the pandemic. In other words, the job market is officially fully recovered. Job gains were seen this month in professional and business services, leisure and hospitality, and healthcare. Data from June showed that while the number of job openings softened to the lowest level in 9 months, it remains nearly 1.5 times higher than immediately before the pandemic. Put simply, job openings are still abundant. This is one factor behind the job quits rate, which was steady just below its recent all-time high. Meanwhile, weekly data show that jobless claims remain relatively low, despite a small uptick. In other economic news, light vehicle sales notched a third monthly gain, but are still 1.3 million behind last year's pace, as this interest rate-sensitive sector that's been battled by supply chain challenges operates below potential. In housing, concerns surrounding economic growth caused mortgage rates to decline sharply, dipping below 5% for the first time since April. Upward pressure on mortgage rates hasn't disappeared, but it has been sapped. The end of the Fed's tightening cycle is likely still a year away, but mortgage rates are forward-looking, pricing in expectations about what's ahead. In other words, as we approach this still distant pivot point in monetary policy, we will likely see more volatility in mortgage rates. Realtor.com weekly housing data showed that the number of homes for sale continued to increase, but again, there were fewer newly listed homes, which means that shoppers are seeing many of the same houses on the market. And for the first time in 2 years, days on market increased over last year's level. With record high prices and decades high mortgage rates putting pressure on sales, it's encouraging to see that the homeownership rate increased in the second quarter, as some first-time homebuyers successfully beat out rising rents and mortgage rates. On a more sobering note, however, this release showed that the vacancy rate for homeowners remains at a record low, while for renters, the vacancy rate has tied its lowest level since 1984. Low vacancy rates signal long-term housing undersupply, which will keep upward pressure on both home prices and rents. You'll find the details along with our housing data for download at Realtor.com/research, and follow us on Twitter for real-time updates.